Okay, Professor Jim Schultz here for my Finance 512 students. I am in the Thinkorswim software. It is Sunday night, February 17th. Well, it's actually just a few minutes after midnight, so I guess it's Monday morning. But I normally set up my currency charts around this time, right before I go to bed. And I thought I would go ahead and record this one, at least in the fiber pair. I'm looking at the Euro USD, the fiber pair right now. I'm going to kind of walk through my analysis. Every Sunday I always like to take a few minutes, usually takes me about 20 or 25 minutes, to go ahead and analyze the fiber and the cable and get my charts kind of set up for the week so that I'm not scrambling all week long trying to figure out what I think's going to happen. You know, where do I see the market reaching for, and what am I anticipating unfolding in the marketplace. And so I am actually in a 2-year weekly chart. I like to start with where each candle is a week. So I mean, we go all the way back. I mean, it's crazy, but back in April 2011, fiber was at 149.39. I mean, that's crazy to even, I remember what that was like, and that's crazy when right now it's at 133 and some change. And so it's obviously been quite a big move in the last couple of years. But I always like to start with a very, very macro view of what's happening in the marketplace. I like to do that, and then I hone in, I dial it down, cycling through lower and lower time frames until I get down to some 4-hour, and then sometimes I'll look at some 1-hour charts to set up my lines and look for my key areas of support and resistance. Whereas most of my actual trading occurs on the 15-minute charts and sometimes even the 5-minute charts. But I'll probably get into that in a future video. So here's what jumps out at me in this chart. You can clearly see that since April, we've been in a pretty significant downtrend, right? I mean, you just have, I mean, you could even do some Fibonacci work here, and you probably see some optimal trade entries per, obviously, ICT's recommendations. You probably see some optimal trade entries showing up here. And by the way, optimal trade entry is that 70% Fibonacci level. That's what ICT refers to it as. And so if you ever hear me talk about optimal trade entries, that's what I am referring to. But here's what I think is interesting. Look at what's happened over here. We had a low, and then we had a high, and then we had a higher low, and then we had a higher high. This is a fractal high right here, this 3-candle high. We blew out this high right here. So I think we could have a shift, a pretty significant shift in the marketplace unfolding right in front of our eyes. In terms of, I think the market is now going to want to reach for higher prices. Maybe target this high up here, or these lows over here. Maybe we're looking at, you know, a 140 fiber price within the next, you know, couple of months. I don't know. But it has the makings of higher highs and higher lows. And what else is interesting is this fractal high is formed, and we have a little bit of a retracement here. We have a little bit of a retreat. And so we could go ahead and fib from this low up to this high. I think that this would be helpful. In fact, what I'm going to do, before I do that, let me stretch out the axis here so we can see it a little bit more closely. So I'm going to go from this low, the recent fractal low, to the recent fractal high. I'm going to drop that down right there, right? Now the 70% level is the optimal trade entry, right? And you can see it's actually right near the 132 figure, and so we have a psychological level at play there as well. But what I'm going to do, because I don't want to leave this Fibonacci level on here because it'll get really confusing when I start going to different levels, I am going to go to drawings, price level. I'm going to drop a horizontal line right where this 62% level would be. Right, so I'm going to go ahead and just drop this horizontal line. Where is that? 132.66. So that's 132.67.8. That's close enough. All right, so I'm going to drop this horizontal line right there, and then I'm going to change. I'm going to edit the properties. I like to make, whenever there's a Fibonacci retracement that looks like prices are going higher, I like to make those. I like to make those lines green, so that I know it's kind of like a go, kind of like a higher. So I'm going to make it that green right there. That looks fine. Let's make it a little wider so it's easier to see. And then I'm going to name this. This is going to be my 62% weekly Fibonacci level, and I'm going to show that on the right edge. So that way, when I'm at later charts, now I can go ahead and delete this Fibonacci retracement, and boom, this level still stays there, right? And it's clearly labeled. So when I'm on later charts, when I'm looking at a 15-minute chart, if I get close to this level, I know exactly where it came from, and that can be really, really helpful. right? And so the weekly chart has shown me two things. We're going to come back to the weekly chart in a second. Well, actually, no, I'll probably just do it right now. But the weekly chart to this point has shown me two things. I've got a nice Fibonacci level to where I could easily anticipate prices falling to this level and then bouncing higher. And I also see some bullish action in that we have higher highs and higher lows and a recent fractal high getting blown out. Right? Now here's the other way I like to use the weekly chart. If you look at this candle right here, it looks like a pin bar. It's not a pin bar because it's not sticking out down here, right? This is an inverted hammer, but the way where it's currently sitting, it's not really telling me too much in and of itself. But what I like to do is, so this is this small candle, this is this week just now forming, because again the currency markets open up on Sunday nights. So what I like to do is I like to take the previous week's high, let me stretch this out so it's a little bit more accurate. I like to draw lines on the previous week high. So let's drop that guy down there, and I'm going to change that to, I'm going to make it white. I always make my weekly lines white so that I can clearly know what they are, and I'm going to call this, sometimes I don't even label it just because I know it's a weekly line, but for helping you guys, I'm going to go ahead and label that. So boom, there's my weekly high. This is obviously the previous week, not this week. Boom, let's draw another one right down there. Let's change this. This is going to be my weekly low. We'll show that on the right edge as well. So boom, I've got my weekly high and I've got my weekly low, and so I've pretty much dissected my weekly chart for everything I want to use it for. So now what I will do is I will cycle down to a daily chart. So I looked at a 2-year weekly chart, I'll look at a 1-year daily chart. And obviously you get a totally different picture, but look how my lines have carried over from one chart to the next. That makes it really, really, really helpful, right? Alright, so what jumps out at me? Now the current price action is sitting right here. Now here is what immediately jumps out at me. You can see a lot of highs and lows and whatnot, but look at this level, right? Let's stretch this out a little bit more. Look at these highs right here. And look, it's sitting at those highs right now. That was the previous week's low. That jumps out at me clear as day. So I'm going to drop a line down on this high, and look how it matches up with that low. Now, all my daily lines are always blue, and so I'm just going to leave that as blue. I'm not going to label it because we're going to have a few daily lines here, right? But this is absolutely critical. Absolutely critical, right? So that is, man, we are sitting right at a key area of support. Now, here's what's interesting. If you look back to the left, this is another key high. I'm going to drop a line down right here. If you look at this line, it looks like it's only a little bit below. This line's at about the 133 figure. This line's at about the 132.80 level. And so that's about a 20 pip, 25 pip difference, right? But look below that. Look at if these three levels get broken, right? The next high that the market is likely to reach for is going to be this one, right? This one right here. So I'm going to drop a line down right there. This one, or maybe this one. So we're going to drop 2 more lines down. Look at all this open space, right? I mean, this weekly fib is at 132.67, all the way down to 131.70. That's a 100 pip move right there, right? So I am going to be paying very close attention to this level. Now, my weekly charts were predicting higher prices, at least as far as I'm analyzing them. You know, somebody else that may be more skilled than me could probably look at that and say, no, it's definitely going lower, and they may very well be right. But my prediction at this point is that we're going to see some higher prices here pretty soon. But I'm really going to watch this level to kind of see what happens, right? Now, just like I did with the weekly chart, I'm going to do the same thing with the daily chart in that I'm going to focus in. This is today's candle that's just forming. I want to look at Friday's candle, right? This one that I've highlighted. So I'm going to zoom in a little bit. So let's zoom in on these candles right there. Okay, so this is Friday's candle. Now, just like I did with the weekly candle, I like to note the previous day's high and low, because I just find that the weekly high and low and the previous day's high and low, the market tends to react to those levels quite a bit. So I don't want to be caught off guard. I don't want to be caught napping when sometimes you get some easy trades out of that. So I like to make my previous day candles orange. That makes it, I like the color coding. It makes it easy to follow, in my opinion. So again, I'm not even going to, again, this is for your guys' sake. This is a previous day high. I wouldn't even label this on my, if I were doing this not on a video, because I would know clearly that the high orange line is the previous day's high. And then, let's see if we get the right one. Yeah, that's what we want right there. This is obviously the previous day's low. So let's make this guy orange as well. I think I used that one maybe. As long as they're kind of close, that's fine. Yeah, it looks close. Okay, so now that you've noticed that, now what do you see? You see a tremendous confluence of events happening right here, right? And all we've done is drawn horizontal lines, right? There's no magic, there's no wizardry. I'm just looking at what the charts are telling me. I see the previous day's low, the weekly low, and a key old high all lining up right here. So for my money at this point, I'm anticipating this acting as support. Now we're not quite there yet. The current price is 133.35, so we've got another 30 pips to move down. But man, I'm anticipating this level holding and bringing these prices higher. But we'll talk more about that as we move forward. Now here's what else is critical. That's going to add to my bullish thesis, my bias as a bull right now. Look at this guy. What is that? That's a pin bar, right? That is a clear pin bar, right? You see a small body with a long shadow pointing out, kind of sticking out from what's around it, right? Not only is it a pin bar, right, but depending on where this day closes, it could also be a fractal low. Right, so we'll see where the Sunday Monday candle closes. It'll be tomorrow, Monday at 5 o'clock, right before class starts. We'll see where this guy closes, but if it doesn't take out this low, that's going to be a fractal low. Then you're going to have a fractal low coming off of a pin bar, sitting at a pretty key area of support. Man, we're getting really, really close to a situation where we're picking some money up out of the corner. I'm not quite ready to say that just yet. I've got to see some more of the price action and see what tonight's London session brings. A London session, of course, being 3 a.m. to 11 a.m. But, man, I'm really interested. What do you see? This is another pin bar, by the way, that you could have made some money on in terms of selling that pin bar and watching prices fall pretty easily. That would have been a pretty stress-free trade. I actually missed that one. Very sad to say, but, hey, you can't catch every trade, and you just have to move on. Okay, so the last thing I want to do is look at this current downswing in the daily chart, right? We see we had a fractal low, a fractal high, a lower low, right? So just analyzing this small segment, this would be a bearish move, right? But when you have to look at the whole picture, which is what we've done, I'm pretty bullish right now. But what I do want to do, nevertheless, is I want to get my Fibonacci retracement tool out again, and I want to go ahead and fib this swing from this high down to this low. Boom. And what I'm going to do is I'm going to drop another horizontal line right on this level. Right? So I'm going to drop a line on this 62% level, because we're way down here right now, right? But I don't want to be caught off guard if the prices do go higher and they stall out right here. That might be a signal for me to start thinking about getting short. So at 134.37, that's pretty close. We'll drop it down right there, and I'm going to make this guy red, because this is in a downswing, right? I'm going to call this 62% daily level, and I'm going to show this on the right edge, and I'm going to make it red. And I'm going to make it a little wider so it's easier to see. Alright, so now I can get rid of my fib if I click on it. So the fib's gone, and that guy's still there. So now what do you see? It's really starting to come together. I've got my lines drawn. They're all clearly labeled. I can clearly see what's happening, right? And now the final thing that I like to do is I like to go down to the 4-hour chart. Oops, I don't want to get off URUSD. I use two different brokers, and they're different the way that they're set up. So I want to go intraday. Let's look at like a 30-day 4-hour chart, and let's see what the market's telling me here. All right. Going from left to right, there's quite a bit going on, but I really want to focus on the current price action and any lines that we can draw from the 4-hour chart. Okay, here's what I see that jumps right out at me. All these lows right here, right? The market struggled with those lows right here in terms of it tried to go higher and it couldn't, right? So I am going to, you can see there's really no clear line, so I'm going to drop a line, pretty much that encapsulates all of them, which is right about there. Right? Again, it's not a hard and fast rule, but I like to make my 4-hour and 1-hour lines magenta, this pink color, so that way, it all stands out. So now, the color coding is so critical in my opinion, because now it's so easy for me to see where the lines came from, right? If you made everything blue or red or green, it's like, alright, I mean, it's really going to get confusing. Trust me, that's how I started out, and my charts just became a total mess, and I was not able to clearly work through the markets and think through what I really wanted to, what I was really trying to accomplish. This 4-hour line, I think, could be important. I don't really see any other 4-hour lines that aren't already captured by the other lines we have on the chart. The only one I might add is this low right here. If you go over to the left, you see there was a high, and then this low almost got down to that high. So I'm going to drop a line right there, actually. You don't want to have too many lines. You don't want to draw lines on your chart just for the sake of drawing lines on your chart. You want to, you want to pick the best lines on your chart. Now, we've got plenty of lines on our chart now. And by the way, the weekly lines, in my opinion, hold more weight than the daily lines. The daily lines hold more weight than the 4-hour lines, and so on and so forth. The higher time frames, weekly, monthly, daily, are more powerful than the lower time frames, like 4-hour, 1-hour, 15-minute, right? And so just keep that in mind. Now, the only other thing I want to do right here, and this will pretty much close out this video, is I want to look at this price action. So what do you see? Originally, it looks bearish, right? I mean, you were way up here, and now you're way down here, so it looks bearish. But actually, if you look a little bit more closely, what do you notice? We had a high, we had a low that took out this low. So at this moment in time, we were absolutely bearish. There is no question, right? But then we went up, and look at this little guy right here. Look at this 3-candle pattern. This is a fractal, right? This is a fractal high. But then look at this next candle. This candle actually made a lower low and a higher high. We would actually call that an outside candle, but I'm not going to get into what that means. But what I really want to focus on is this high took out this fractal high, right? So when this happened, all of a sudden I might be thinking, maybe the markets want to go higher. I was actually just sitting on my hands at this point because I did not know what the market wanted to do. But here's what I do know. The market made a lower low. It just barely took out that low. And then in the following 4-hour candle, it went a little bit lower. But it did not make a meaningful lower low. I mean, it barely took out those lows, and then it went higher, right? In terms of higher right here. It blew out the recent fractal high here. And it looks to me like the market wants to make higher highs, right? So I'm going to be very interested to see what these next couple of 4-hour candles bring. I want to see this low intact. I do not want to see this guy get blown out. If this guy gets blown out, then you're going to see all of our lines here could get blown out. And now all of a sudden my bullish thesis, my bullish hypothesis for higher prices, I'm back to the drawing board, man. I'm back in the bushes waiting to see what happens because I'm just not sure anymore. But if a fractal forms down here, right, where I have a low and a higher low, then I'm going to be pretty confident that we are probably going to see prices up around this level to where I'd be looking to target the previous day high, maybe the 134 figure, maybe this level here, 134.10, or maybe I shoot for this 62% daily Fibonacci retracement level, right? These would be logical price targets. But for right now, I'm just in kind of a wait and see mode. It's almost 12:30, so I am going to set my alarm clock, probably get up around 4 o'clock this morning and kind of see where the London session begins to take this market. And so hopefully this was helpful for you. This is a pretty long video, and so if you made it to this point, man, I applaud you because you are a serious warrior at this point. But hopefully this was helpful for you in terms of drawing lines and how I begin to analyze the currency markets.